Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to discuss the TFX Reversal Indicator. Alright, the TFX Reversal Indicator is a nice indicator that traders can use to identify clear entry and exit points. All right, it's a custom indicator that combines multiple technical indicators into one cohesive system. All right, so I'm going to be adding the indicator to the chart right away. I have already downloaded it because it is a custom indicator, meaning it's not readily available on the MetaTrader platform. Okay, so this is how the indicator looks like. All right, as you can see, the indicator is represented by dots. Now, those dots give you precise entry and exit points. Okay, now, in as much as this indicator is effective, it does not guarantee profit. Okay, so basically, whenever you have a pink dot on top above the candlestick, it's a sell signal. Quite easy, quite straightforward, right? When you have a pink dot above the candlesticks, it's a sell signal. So once you enter your sell, you can set your stop loss above the previous swing high. For example, let's say we enter the sell here after this signal appeared. Could have set our stop loss above the nearest swing high. Then for your take profit, you can decide to use support zones, or you can decide to wait for a blue dot to form below the candlesticks, and that's going to be your exit signal, all right, for your sell. On the other hand, your blue dot can be used as a signal to enter a buy trade. But because of the frequency of the appearance of these dots, as you can see, just within this space, the dots appeared how many times? You can see 1, 1, 2, 2, 3, 3, 4, 4, 5, 5. So the pink dots appeared 5 times, the blue dots appeared 5 times. So unless if you are a scalper, then I wouldn't recommend trading against the trend. All right, just focus on trading in the direction of the trend. So when you have identified the trend, this is a sell trend, for example, look for only sell signals. Okay, look for only sell signals, because sometimes the buy signal within a sell trend might just be a very minor pullback. As you can see, this particular indicator, sorry, this particular buy signal that appeared here, it was just about, let us see, it was just about, is it 30 pips? And this is the 1 hour time frame. So you can understand 30 pips in a 1 hour time frame. So that's quite small, right? So if you are not a scalper, just neglect the signals that are against the trend. All right, focus on the sell signals in the sell trend and focus on the buy signals in the buy trend. So when you enter a sell, for example, set your stop loss below the previous swing high and target support levels for your take profits. All right, or you can target the blue dots appearing as your exit strategy. Another indicator you can use, or rather another strategy you can use for your exits are indicators, other indicators, right? You can actually decide to add other indicators for confirmation. Okay, like if you want to confirm your exits, one of the indicators you can decide to use is the moving average. That's if you are a swing trader. All right, for example, you like to ride trends, right? If you like to ride trends, you can actually decide to use moving average, because the moving average is going to give you the opportunity to stay longer in the trend, right? Because as we can see, these blue dots appeared 5 times, like we already noticed within here. However, this sell trend remained all the way from here to here. We are still in the sell trend. So if you had exited here, you would have missed out on these moves. If you have exited here, you would have missed out on this. If you had exited here, you would have missed out on this, and like that, like that. But using a moving average or a trend following indicator that do not quickly give signals, that do not give signals very frequently, like the TFX Reversal Indicator. If you are using such indicator to confirm, then you might stay longer in trends. So when you want to exit your sell trend, you have to wait for the price to break above the moving average and retest it. That is, if you are using your moving average as your exit signal, you have to wait for price to break above it, and not only break above it, but retest it and start moving back upwards. Then you can exit your sell. Because in this case, it broke above it, but it quickly broke back down below it. Okay, so you have to wait for a retest and continuation. That did not happen here, so you shouldn't have exited your sell here. So you have to wait for that to happen before you finally exit your sell. In that case, you are going to stay longer in the trend. Okay, now if you have a a buy trend, or if you have identified a buy trend, you can look for the TFX reversal indicator. Only works with current price activity. As you can see, the dots are not showing here because it's focusing only on recent price activity. Okay, so if you want to look for historical examples, you won't exactly find the dots. All right, but had it been we had a current bullish trend and you have the dots form, the blue dots are going to signify buy signal, right? Buy activity. So once the blue dot form, you can go ahead and enter a buy, set your stop loss below the previous swing low, and then your take profit. You can actually use resistance zones for your take profit, or you can use other indicators such as moving average to confirm your exit. Okay, because the pink dots forming on top might, make you exit on time, right? You might leave some money on the table. So that is the reason why I'll actually recommend using an indicator like moving average to also confirm your exits, okay? So that you can stay longer in the trend, all right? So that is it for this indicator. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Meanwhile, whenever you are trading, make sure that you observe good risk management. Do not trade an amount you can't afford to lose. Make sure that you don't risk more than 2% of your capital in a single trade. All right. And ensure that you use good risk to reward ratio. Okay. For example, do not use a 1-to-1 risk to reward ratio, meaning if you are risking $1, your potential profit should not be $1. Okay. I recommend a minimum of 1 to 2. So if you are risking $1, your potential profit should be $2. All right. So that is it for this video. Thank you for watching. Kindly like and subscribe if you have not done that already. And don't forget to hit the notification bell so that you're going to get updated on more trading videos like this. I wish you a very happy trading. See you in the next video.